Hi, this is Acme with the US Chartbreakers here at Zach's Traders Cafe for Sunday, the 16th of April, and an okay end of the week for the S&P with the little U-shaped bull flag above the rising and 50-day moving averages. That suggests that above 4130 and the initial April resistance, we could head up to the 4200 area, which was February resistance. Big picture target maybe by the end of next month up to 4350, which obviously seems rather unlikely at the moment, but we do have the technical backdrop at the moment with those rising 50 and 200 day lines. On the downside, the worst we can see is below 40.70. We go down to 40.30, but not expecting lower than that. On to the stocks, and a lot of reappearances, which is normally a good thing given that the normally reappearances because the stock's gone up. In the case of Bullfrog AI, we've got the hot AI situation at the moment. I don't think there's anything hotter than AI at the moment in the market. Above the old resistance there, the initial resistance from back in February at $6, we're looking for as high as $10 by the end of next month, perhaps much sooner than that. That's at the top of that rising trend channel from February. If you're fussy, I suppose, maybe you could say that the stop loss area would be just below the $6 area, maybe 570 or just below that. Moving on to another AI situation. Here we've got Big Bear AI, and here you can see that this market's sort of toying with the 50-day moving average, either side of that for the end of the last week, but we're still looking for the shares to break to the upside above recent support around $2.70, looking for the stock to head up to the top of that rising trend channel from the turn of the year as high as $7, maybe by the end of next month. Probably just waiting for that 200-day line to flatten out or maybe go positive, same with the 50-day lines there. And off we would then go. RSI above the neutral 50 level, so that's why we regard this as a positive consolidation. On to CXapp, and here we had we've had two massive gaps to the upside, Thursday and Friday. Obviously very impressive stuff. Situation now is trying to work out where support will come in. Probably the old resistance on the way down back in March. That peaked there around $10.98, so let's call it $11. Above $11, looking for that resistance line there from back in February, heading towards the $21 area, maybe as soon as the end of next month. And of course, could be sooner than that. But $11 looks as though that would be a decent pivotal support area for the shares. Moving on to stock, which is also looking quite fiery at the moment. CNS Pharmaceuticals broken through the 50-day moving average around $1.50. Above that, we're looking for $5.50 by the end of next month. And the more price action we get above that 50-day line, the better over the near term. Basically bouncing off the floor of that broadening triangle from December, and then looking for shares to get through both the, not only the 200-day line near $4.50, but also that $5.50 target. Stock which is new to me and new to the chart breakers here is Fiscalnote. Here we've had a break above the 50-day moving average, also a break out of a triangle which was in place from the latter part of last month. The 50-day line around $2.40. Above that, we're looking for the top of that rising trend channel from January as high as $6 over the next 1 to 2 months, and stop loss there just back below the $2 level, so not a bad risk reward. If everything takes off nicely, the last little bit of impetus for the upside there, apart from the 50-day line break, was the bounce off neutral RSI 50. One of the most frequent stocks on the US chart breakers is Marathon Digital, and here we're making further progress. We hit the top of that rising trend channel from back in November. That was around the $11.30 level, above $11.30, looking for $14, which is a November resistance line projection. So that's exceeding our upside target in a reasonably decent way for Marathon Digital. On to a stock which I saw somebody on Twitter is quite keen about, Marpai, and here we've got a situation where the shares have given us the classic vertical move. The current situation is that we're above the old resistance on the way down from the summer of last year. That was well, by the early summer of last year, that was around the $1.70 level. Above that, looking for as high as a retest of the resistance of last week, up towards the $3.50 area by the end of next month. So interesting risk-reward situation. You might have to allow for a little bit more than $1.70, but above that level on an end-of-day close basis, $3.50 could still be on the runway for the bulls. So another stock which is new to us in this particular suite, Nurix Therapeutics. Here we've had a nice break above old resistance on the way down, so that was around $11.60. Above that, we're looking for as high as $15 by the end of next month. If you're cautious, you wait for an end-of-day close back above the 200-day line around $12.80 before targeting the $15 plus area over the near term. Have looked at this stock, the next one before, Nogin Inc., and here you can see that got an interesting type of setup here. The shares obviously completely bombed out after falling from dizzy heights, but it's interesting that there has been some bullish divergence here, and if you, off the recent lows that is, and we've got a broadening triangle turnaround above the $1.60 area. Looking for the shares to perhaps head back towards the old support on the way down near $7 over the next 1 to 2 months. If you're cautious, maybe you wait for the RSI to get back above neutral 50 before taking any kind of plunge on that, falling knife plunge. But you can see that there's been a couple of gaps, unfilled gaps to the upside, so they look like bear trap gap reversals over the last week. So it does suggest that there could be a flip to the upside over the next few days. On to the last three. First one is Oblong, and here we have a turnaround through the 50-day moving average, also recent resistance around $2.10, a 50-day line around $2, but above $2.10 we're looking for up towards the top of a broadening triangle from the of November time of last year, $4.50 by the end of next month, while we hold above the $2 area on Oblong. One of the biggest rises at the end of last week is coming up next, and here you'll see that Petros Pharmaceuticals broke through not only the 50 and the 200-day moving averages, but actually closed above the 200-day line around $4.40. Above that, we're looking for on towards the top of a broadening triangle there from September last year at $10, and the $10 target certainly valid while we hold above the $3.20 area, which was resistance on the way down. Ideally, of course, there's no breakback below the 200-day line, but that might be asking a little bit too much. Finishing off with SAI, and here you can see that the shares delivered to a massive 2-day run there. The current situation is that we're looking for the shares to find support at old resistance around the $3.90 area. Above that, then there's the prospect of a move up towards as high as $10 by the end of next month at the top of a broadening triangle from September last year. Nice build up there over recent months in terms of the RSI profile. We've had an uptrend line there. Multi-tested one since February, so that should stand the shares in good stead, even though we're very volatile and we've had a massive turnaround. It's an island gap reversal, so we gapped down back in December and then gapped up obviously this month. So lots going on at Sai.tech or Sai.tech. That's it from me today. More updates during the week.